Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of company filings and unearth some pretty surprising secrets. Today we are diving into a report from Broadway Financial Corporation, and let's just say they are facing a bit of a rocky road with their stock exchange listing. It is certainly not a typical financial report, but it does shed light on some crucial operational challenges. Before we dive deep, make sure you are subscribed so you do not miss any of our future analyses. Also, we have a fantastic Discord community linked in the description below where we discuss these filings in real time. You do not want to miss out. So what is this all about? Well, Broadway Financial Corporation, or BFC, received some less than ideal news from the Nasdaq stock market. The big stock exchange they are listed on. Basically, they failed to submit important financial reports on time. This is a pretty big deal because being timely with your financial reporting is a fundamental requirement for staying listed on any major stock exchange. Think of it like this: if you do not pay your rent on time, you might have issues with your landlord. Nasdaq is the landlord here, and BFC is a bit behind on their rent payments. The specific report they missed was their quarterly report on Form 10Q. For the quarter that ended on the 30th of September 2025. This is a crucial document that provides investors with an update on the company's financial performance and health. Not filing it on time sends a signal of potential trouble, or at least a lack of organization in their financial reporting process. Now, the company acknowledges this problem. They say they could not get the report done on time because they needed more time to figure out how they are accounting for their sold loan participations. That is a fancy way of saying they are looking at how they record sales of parts of loans they have made and how that affects their overall financial picture. Accounting for these things can get pretty complex, especially when you are dealing with rules from organizations like the Financial Accounting Standards Board, or FASB, which sets accounting standards in the US. They were already given an extension for a previous report, the one from the quarter ending the 30th of June 2025. That extension goes until the 16th of February 2026. Now they are being told that any further extensions to get their books in order, including this missed September report, will also be tied to that February deadline. Nasdaq has given them until the 8th of December 2025 to submit a plan on how they will catch up on all these overdue filings. If Nasdaq approves this plan, then BFC will have until that February 2026 date to actually file the report and get back into compliance. This situation does not seem to have an immediate impact on the trading of Broadway Financial Corporation stock. Their class of common stock is currently trading on the Nasdaq Capital Market under the ticker symbol BYFC, so for now investors can still buy and sell shares. However, receiving these notices from Nasdaq is a warning sign. Continued non-compliance could eventually lead to the stock being delisted, which means it would no longer be traded on Nasdaq, and that would be a very bad outcome for shareholders. The core of this filing is really about this notice from Nasdaq. It is a formal notification that BFC is not meeting the ongoing requirements for being listed. The rule they violated is called Nasdaq Listing Rule 5250C, one that specifically relates to periodic financial reporting. Companies are expected to file their quarterly and annual reports with the Securities and Exchange Commission, or SEC, on time. When they do not, it raises eyebrows. To make sure everyone is in the loop, the company also issued a press release about receiving this notice from Nasdaq. This is standard practice under Regulation FD, or fair disclosure, which requires companies to share important information with all investors at the same time. The good news is they are being transparent about the situation. The bad news is the situation itself. Now, in these reports, companies always include these cautionary statements about forward-looking information. This is basically a legal disclaimer. They say that while they expect to submit their plan and file the report promptly, things could go wrong. They mention risks like Nasdaq not accepting their plan or further delays in their financial reporting. It is important to remember that these statements are about the future, and the future can be unpredictable. The filing also lists exhibits which are supporting documents. In this case, it is the press release we just talked about and a formatted cover page called an inline XBRL document. These are more for the technical side of filings and not usually the most exciting part for the average investor. Now let's talk about what this all means. Broadway Financial Corporation is facing a compliance issue. It is not about their core business operations faltering in a massive way right now, but rather a failure in the administrative and reporting side of things. The reason for the delay revolving around accounting for sold loan participations suggests there might be some complexities in their business model or specific transactions that are taking time to properly document and report. This can happen especially in financial institutions where transactions can be intricate. The good news is they are aware of the problem. Nasdaq has given them a clear deadline and a path to regaining compliance. They have until the 8th of December to present a plan and until the 16th of February 2026 to file the overdue report. The key will be how they execute this plan. Are they truly capable of resolving their accounting issues and preparing the necessary reports within the given time frame? The fact that they had to extend a previous report also raises a flag. It suggests a pattern of challenges in meeting reporting deadlines. Looking ahead, there are a couple of main risks. The first is that Nasdaq rejects their plan to regain compliance. This would put them in a much more precarious position. The second is that despite their best efforts, they still cannot meet the February deadline. In that scenario, a delisting from Nasdaq becomes a very real possibility. On the flip side, if they can successfully navigate this and file their reports on time, they will buy themselves valuable breathing room. This would allow them to focus on their core business and rebuild investor confidence. For investors, it is crucial to watch for updates on their compliance plan and the actual filing of the Q310. The company's ability to resolve these reporting issues will be a key indicator of its operational effectiveness and its commitment to transparency. We want to see them get their house in order financially so they can focus on growing the business. So that is our read on this particularly administrative but important filing from Broadway Financial Corporation. What are your thoughts on their situation? Will they be able to meet Nasdaq's deadlines? Let us know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate insights. And don't forget to join our Discord community linked in the description for more immediate discussions. Thanks for watching, and we will see you in the next one.